Afternoon all. How are we all doing? That was an interesting morning, wasn't it? Busy. Awful lot of movement today. Very, very busy. Afternoon, Ian, Virginia, David, Eduardo, Kennelly, Brian, Mark, Brian, Mark, Kennelly, Brian. Brian's further down. Afternoon, Dion, Guillermo, Kevin, Pound New Zealand up from here? I don't know. Gregors. Yeah, Pound New Zealand maybe. I don't know. I'm short. I'm staying short at the moment until I've hit target. Yeah. Afternoon, Johnny. So lots of movement today. I've just banked 1% this morning. Got out of the Aussie US. Basically hit target. Oh, where's my pen? My target was propulsion, which is hit. Hello, pen. Where are you? There you are. So that was the target, the bottom of that propulsion gap, basically. So hit that, slammed through it, 175 ADR. Euro New Zealand. We looked at this one this morning in the live room. I said basically when we get to this monthly high, I'll be looking for an aggressive drawdown control position. As you can see, there it was. Triggered beautifully on the reversal alert, and I took it off at ADR and did some drawdown control using that one. So I've reduced the position size down and brought the average up on that. So yeah, banked a little bit. There's still ADR reversal alerts going off all over the place. Just ignore everything today. There's just no point in getting involved in anything, really. If you're in it, keep in it. If you're not in it, leave it. Just wait. No idea where this is going to go. Could go absolutely anywhere. So if you're trading with the reversal alerts EA, just watch new positions taken today. It may get you counter some positions you don't want to be in. For example, anything long US dollar, probably wouldn't get involved in it at the moment. Not after those CPI figures. So you can obviously set the EA to go short only if you want to, but I tend to just eyeball stuff and just shut it, close it, and take tiny micro losses on it if necessary. But yeah, just be a bit careful of the US dollar. Afternoon, Baggy, Emac, Paolo, Hamza. So yeah, basically CPI figures came out lower than expected, prompting the market to go into a total frenzy about the Fed dropping rates earlier than expected. So this is all speculation at the moment. Yeah. So the market is basically, we were expecting the Fed to reduce rates quarter 4 2024. Yeah. So that's October, November, December. So sometime in October, going into winter. These CPI figures have caused a little bit of a frenzy where now they think they're going to drop the rates towards summer, possibly even May. So that's 6 months away. So that's quite a reduction in the, or rather acceleration in the speed of rates being dropped. The Fed haven't obviously said anything at all. So we need to wait and see what the Fed say. The Bank of England has jumped on board, basically saying we no longer need to raise rates, or we may no longer need to raise rates. So this is Bank of England trying to combat the drop in the US dollar and make sure that the pound is stable against the US dollar. Barkin's just come out and said, not quite sure, really, you're realistic about May. Not sure it's going to be that smooth of a run down to 2%, which I tend to agree. But we'll see what happens. So this is a knee-jerk reaction. So this could completely reverse. It could completely follow through. So we'll have to wait and see. Fed swaps in 50 basis point rate cut in July. The first rate cut I would say will probably be a little tentative, like a 0.25%, not a 0.5. So I think this is a little bit of a market overreaction, but it is overreacting. So ADR is obviously all over the place today. So just be a bit careful. These moves may stick, may not. Don't know. US dollar yen that I got into yesterday, Swiss yen is just hit ADR as well. US dollar yen that I got into yesterday, that's nicely in profit now. So holding that, I'm going to hold on to it basically and see if we can get a rally down into these lows. But everything has moved. Yeah, so you've had massive movement on the Australian dollar, big movement on the Canadian dollar, big movement euro. Everything has moved all over the place. So just wait for it all to kind of settle down. It's very difficult to tell what the long-term move is going to be off of this, but it could be the start of our Santa rally on the indices and obviously US dollar decline, which is what we've been waiting for. But Fed haven't said anything yet. So, you know, this is basically us guesstimating. Pound US dollar's lovely resistance at 200 ADR. So whichever way you look at it, you're about to paint the mother of all propulsion gaps there. So who knows? Could go anywhere, couldn't it, today? Oil's had a beautiful rally off the back of that as well. So we had another new high put in today on oil, which is nice. So for indices, up to you what you want to do. I have decided to let these run, but with a very, very, very small risk, 0.1% risk. So I've reduced the risk down by 20. I'll do maths. 25%, no, 75%. So I've dropped it right down, 80% even, sorry. So yeah, I've dropped risk completely to the floor, basically. The only reason I'm getting into them this afternoon is just curious to see what happens, first of all, because obviously this move, if it does retrace, is a hell of a big profit-making opportunity. But more because I haven't actually banked anything today because I didn't manage to make any money on the DAX today. So I thought we'll have a crack with the open and just see if we get any volatility coming through. But typically when you get this type of move, the market is exhausted at the open and it can't really make a lot of progress. Hedged on the NASDAQ, and you tend to get a lot of hedges. Long on the S&P, short on the Dow. So hedged, one of those two is going to hedge. So it's two hedges. So it's, as I suspected, not a very good day to be trading indices. So yeah, I'd be a bit careful with the indices today. You're unlikely to get any rational movement today, but we'll see where we go. So DAX this morning, it's really difficult to see anything because obviously we've put in a whacking great 100, 150 ADR candle. But this morning on the DAX, got hedged. We pushed down into the lows, into the pre-market lows and rejected. We pushed up, pulled back, and then started a rally. So I took off the shorts as we hit the highs, expecting it to break out, which it did. So I got out with a break even, basically $100. So break even on the DAX today. And then it just sat there and did nothing until the news. So yeah, that's what I did on the DAX. But yeah, everything else I think we're going to struggle with today. It's going to be an interesting day. More thumbs. Hit the like button, everybody. James, afternoon. John, Kevin, Dow futures up, up, up. Yeah, everything will be up. US dollar's down. Indices do the opposite to the US dollar. So yeah, we'll see where we go. It's going to be quite a tricky session today. So more luck than anything today. 200 ADR, pound US dollar. See if we can get 225. So yeah, just I mean, there's a massive, massive fade opportunity on all of this today. Everything you're seeing extended here, you you know, sometimes these news events cause complete A-shaped recoveries. Sometimes they take days. Sometimes they happen within 24 hours. Sometimes it is a propulsion move that is part of a fundamental shift, and it will just rally away and it will never come back to that propulsion gap that's forming at the moment. So you can't tell. This is a tricky one because when you actually look at the news, this is just a, as expected, slightly better than expected, or slightly worse than expected in this case for the US dollar, but ever such a slight miss. So it's not actually as dramatic as these market moves look when you look at the actual numbers. It's we were expecting a 3.3. We got given a 3.2. It's not big, is it? It's a 0.1 variance. We got a 0.1 variance and a 0.1 variance. That's tiny. So this is a bit of an overreaction. So be a little careful. But wait for the market to decide what it wants to do. Dow is breaking short. There's a lot of volatility coming in. Pound yen 125. So for those of you, obviously, if any of you got into the US dollar yen as I did yesterday or the day before, yesterday. Once we saw the intervention move coming and that break above the high, that's nicely in profit at the moment. New Zealand CAD 200 ADR. I'm going to hold this. All your other yen pairs are going the direction of the base currency rather than the yen. So we were expecting a yen intervention move, obviously, and that is based off of US dollar strength against the Japanese yen. US dollar is now not strong against the Japanese yen, so that risk of intervention vanishes. It's not there. They're only intervening because of the US dollar exchange rate, which is what their major currency transactions are done in. Pound CAD 200 ADR. So all of these other yens, you will find they will just move in the direction of that currency. So the pound is rallying at the moment. The euro, New Zealand yen, 150 ADR. New Zealand is rallying at the moment. Euro is rallying at the moment. Swiss is rallying at the moment. CAD is dropping with the US dollar. It's not moving anywhere at the moment. Aussie is rallying at the moment. So everything else, yen, will just go with the base currency, which is the Australian dollar in this case. So we're not necessarily going to get that intervention now. However, if everything rallies against the yen, obviously that does weaken them across the board. So we may get some further liquidation from the yen, but we'll have to just keep our eyes peeled as to whether Suzuki comes out and says anything else. I'd be surprised if he does, but we'll see. ADR is going off all over the place. Pound Swiss ADR. See if we can get a full house today. So we're missing 8, oil being one of them. Pound New Zealand's coming down nicely. That's one we got into yesterday. US dollar Swiss now 150 ADR coming down into propulsion. So again, look for bounce points on these logical areas where we're going to find limit order triggers and the market get exhausted. It will get exhausted on these moves, but it's going to need something to push it back. So you want to watch for any areas of potential support coming up. So 225 ADR today. Well, we can hit that today, obviously, but if we don't hit it today, if we do hit it tomorrow, look for a pullback, 50% of that move at least. Weekly range hit, Aussie CAD. We're going to get loads of weeklies going off as well on these moves. So, but we'll just have to wait for them to settle down a bit. Can't actually see the US indices because this candle, you're not going to be able to actually see any price action at all today. Long on the S&P, short on the Dow, NASDAQ's hedged. Interesting. Afternoon, Peter. So we got further movement happening on this US dollar. It's still coming down hard. Going to trigger a third short on the US dollar yen. I think I might actually get rid of that position because what's likely to happen is we're going to push and then pull back and then drop. So you actually, if you want to add to that position, you're better waiting for the pullback and then jump in short rather than adding there and just goes into drawdown. So I'm happy with just 2 positions short on it at the moment. As it's not an intervention move now, I will take half of it off. Take half of it off on a 50% retracement and then keep the second half on to run that all the way down to the lows. So that'd be about 1.25%, something like that. Markets seem to be wanting to break long still, which would make sense if the US dollar is going to be weak. I'm just going to get out of the Dow. Only reason I'm getting out of that, it's such a volatile day. This one is breaking long. This one's breaking long. The Dow has triggered short. This US dollar is going to continue to drop. These are going to pump. So that is hedged. That will go into profit. So that will pay for that. There's no point in letting that run, basically. So I'm just going to leave that Dow alone today. The DAX is breaking high as well. So it looks like this run on the US dollar should probably continue this afternoon for a little bit. We'll see where we go. Given how big the last intervention move was, the Japanese aren't going to be happy until the yen is down to 146, 145. No, the Japanese will be happy if the yen is not being devalued, which it isn't anymore. ADR 175 on Aussie CAD. So they're pushing. They're trying to push US dollar yen down. US dollar yen is coming down on its own now. Absolutely no reason for them to get involved. This will naturally come down. Look at what happened after the intervention move. This will naturally just, if this is the turning point for the US interest rates, the US dollar is naturally just going to weaken now for the next 3 to 6 months plus. It's just going to fade away as it has been rallying. Yeah, the market does the opposite. It's been rallying, fade away, rally, fade away. Now it's going to fade away. Whether it fades away 50%, a third, it's exactly the same as any move in the market. It's just long term. Yeah, stick a fib on it. Shallow, medium, deep pullback. So this is it. We haven't had the Fed talk yet. So when Powell starts to say something about this, we'll know a little bit more. And that's when the market's going to really listen. We've had already the Fed coming out and defending this afternoon already. Barkin's already come out. I fear more needs to happen to curb demand and inflation. Yeah. They're saying, yes, CPI has come down by 0.01 deviation on our forecast. That's nothing. Yeah. For the market to be going, oh, we're going to drop rates by 0.5% in July. No, hang on a minute. We've just had a 0.01 better result than we were expecting. That's it. It's not the end of the world. Yeah, we're not suddenly going to cut interest rates and everybody's going to become rich because we've had a 0.01 variance on a forecast. It's not, this is what I'm saying. This is a knee jerk. So we could have a V-shaped recovery on this within 24 hours. We've seen it before. We'll see it again. It happens all the time. Don't get too excited. We're at the highs on the S&P. The NASDAQ's struggling this afternoon. You can't really see anything because I hate it when these big news events going because you just literally can't see anything. If you zoom in, you still can't see anything. So we are breaking out on the NAS. We've broken out on the S&P already. S&P is 1.5 bar, so it's almost at target. Coming up to 1R on the NAS. Aussie yen 175 ADR. This Australian dollar, Aussie and New Zealand seem to have benefited the most from this move. They've pulled all the money out of the US, and this is a really good example of what I keep saying about the market having two sides to it, and there being an infinite amount of money in the market. Yeah, you have got a pot of cash sitting in the Forex markets. If one of those pots gets reduced, that money that's been reduced has to go somewhere else. You don't just take it out. It's got to go somewhere. So you convert it. Yeah. Which is why the US dollar yen, when the intervention move happens, is 3 or 4 times a bigger move than everything else. Because what they're doing is they're liquidating US dollar assets, turning them into yens, which is why that moves twice as fast. So all this US dollar, if you look at the ADR dash, most of this US dollar seems to have gone into the Australian and New Zealand markets at the moment. Huge moves on these. Euros only just hit ADR. Look, if you look at the euro US dollar, again, all gone in. A lot of it's gone into the euro as well. So they're pulling it all out of the US dollar and sticking it in all the other currencies at the minute, while they decide what to do. They may decide, and the Fed will come out and say, I don't know what the hell you lot are doing, but we don't see anything getting better. We see this as, yes, inflation's coming down as forecast, but the forecast is slower than expected. We may have to do more. Be back up there tomorrow, Thursday, Friday. Yeah. So look at the Liz Truss thing, yeah? Really good example of bank intervention. Yeah, this is over a longer period. This is over a week, but it's the same thing. Liz Truss, Bailey, central government, Bank of England. Yeah. No. What are you talking about? You got it all wrong. Yeah, this is just be careful. Not written in stone by any means at the minute. That move there as well. Look. Even if we're going higher, going to pull back. They're going to profit take this move. There's a lot of speculative money in there. Dow's out the high. S&P still rallying. S&P's almost at target. Not that you can see it, but it's almost at 2R. Afternoon, Evans. AJ, that was the lettuce head lady, right? Yep. If you call it, no, can't remember what it was. Was it cabbage they compared her to? Can't remember. It was on the news in the UK, basically. One of the news channels basically compared Liz Truss in Parliament, and they got a cabbage, and they wanted to see who would be out first, Liz Truss or the cabbage would rot. I think it was a lettuce. Might have been a lettuce. I can't remember. Yeah. How to ruin the economy of a country in one simple speech. She's not the first, won't be the last. A little bit of a pullback underway on the NASDAQ. Dow is out the highs. S&P still rallying. Again, with these hedges today, if you are trading these markets this afternoon and you are hedged on anything, don't don't go trying to jump out at 1Rs and things. Yeah, look at this move and look at ADR. We do easily do on a large news event 225% of ADR plus. Yeah, 2% of the year. We extend beyond 225% of our average daily ranges. We are here. Yeah, there is potential for it to go above that level. This is a previous monthly high. We could be up there this afternoon. Yeah, if this US dollar continues to drop, this will continue to pump. So if you are hedged, don't try and mean revert it necessarily, because it may not stop. Where's the Dow going? Wherever it wants. This afternoon. Monthly high is 225 ADR. So, 225 ADR is your next stop. Remember, we looked at this morning, and I said, if we break the highs on the DAX and the Dow and everything today, there's nothing to stop it until we get up to this area here. We've got this high here, potentially, that could act as resistance, which is 150 ADR. So it could find some sells there. I'd be more inclined to say if we're going to rally, we're going to come from this level here, because this is a really good support resistance. So this area here. Yeah, that's 225 ADR. But it's going to mean that they're going to need to sell the US dollar off continuously all afternoon. If they don't, then it's not going to get all the way up there. TP1 hit on the S&P and out on the second half, almost, pretty much. That's a quick rejection. There you go, out the S&P. So 439 banked on the S&P, hedged in at 300, so $140 locked in, did $100 on the Dow this morning. So on a day like that, coming out with a positive result is a win. I'll take it. So NASDAQ, again, if you look at the NAS, upside, you are at resistance as well. Look, so NAS and the S&P both at potential resistance right where we are now. Failing that, we're looking at this high, which again is 200 ADR. So it's either going to reject exactly where we are now on the S&P and the NASDAQ, we're going to find some limit orders with trigger and we're going to push back, or we're going to rally through to that other high, which is around about another half an ADR from where we are at the minute. So 200 ADR, you're looking at somewhere in the region of 159.40. Those prices are different, aren't they? 157.96. I know. So did I say 159? So yeah, I mean 5R is a little tight. I would say you want to be looking sort of up there somewhere. 159.40 area. The danger is if you get out on a day like this, if you get out too soon and this just decides, screw it, I'm going. We've done 300% on the Dow, and we've done 300% on everything before. You just get into trouble. So I would rather lock that in and just walk away with a win on the day than try and get out of this with a profit. You're much better just leaving it. 50% retracement on the propulsion move, though. That, yes, I would be happy with a 50%. Quite often we will retrace 50%. But there is also a danger of doing 100. So honestly, if you're hedged on anything, you're just better off taking that safer. I'll let that run though. I'm just going to change the risk on these back to where they were. Just so that I don't forget for tomorrow. Otherwise, I shall be trading tiny risks. Right. So there's absolutely no point in doing any analysis this afternoon on anything. RSIs, ADRs, everything is all over the place. So if you're using the market reversal alerts EA, you are going to be getting into that, all this stuff. You're going to get into all of this afternoon. Yeah. So just be careful, obviously, with new positions. Because we don't know whether or not these moves are going to get undone or not. So looking at where we are at the moment, so Euro CAD on the hourly, first reversal alert on this. I'm already in this short anyway. When did I get into this? Oh, back there, wasn't it? Yeah. So I'm already in this short. So I will be taking second entry on this today, the next reversal alert. So I'll be getting in there, which is about 3/4 on ADR, so about spot on. So I'll be getting into a Euro CAD short, second position. Euro US dollar, that will be a first entry there. Short. Sorry, no, I've already got one on that as well. Oh yeah, I got back in there. Yeah, we haven't gone anywhere, have we? Haven't gone anywhere for a week. So yeah, second entry, we'll be going in on that one today. Pound CAD, first entry on that one on the 5-minute reversal. So that will be the first entry there, short. So again, that one pull back down into the propulsion gap is 3/4 of an ADR. Anything that's moved this fast and this hard, I would be looking for small targets. Just get out just in case that propulsion gap holds. We've seen many times we retest that, we just can't get anywhere near it. They're buying that and they're sticking with it. So just be a little careful on these reversions. And pound US dollar, so that's nicely extended. We're above last week's high. Big move, 225 ADR. So that's about to trigger ADR. 225, that's your first one, which is going to be pound US dollar. That's your first 225 ADR hit. One more. Okay, took your time. So there's 225 ADR on that. So first reversal alert there. You're looking at a propulsion gap, A-shaped recovery on that of 134 pips, 1.5 ADR. So if you get into any of these, I mean, the EA is going to get me into these. I don't really have a problem, but something that's extended this far, there will be a percentage of speculative money in that move, which will be pulling itself back out again and taking profit. So I've got no problem getting in the opposite way on these. Just be careful of exposure, yeah, because a lot of these are Canadian dollar and US dollar. They will both move together. So if you're going to get into 3 or 4 different US pairs and 3 or 4 different CAD pairs, bear in mind if this move does continue, you're going to be exposed 6 times. So just watch your exposure. Make sure you don't get too overexposed on anything, because everything's obviously moving at the same pace. Oil still moving very nicely as well. So that's coming up to target. I will still be taking that off there, and I'm going to do some drawdown control on higher up levels when we get there. Still got a lot of work to do to get out of that oil move, but all going in the right direction now. Indices are still rallying. Dow has just made new highs. S&P's made new highs. NASDAQ's stuck, interestingly enough. So the NASDAQ, we're now 20 minutes sideways. S&P and Dow making new highs on the day. Just getting out of another position over there. There we go. Anybody got any other pairs they want to look at? I don't know where anything's going, so we'll wait until tomorrow. Wait for this all to calm down, and then we'll see where we go. But obviously, a lot of stuff is unraveling. A lot of stuff is going into drawdown. So anything you've got, like for example, I've got this CAD Swiss on, and I've got a Euro New Zealand. These are kind of inversely correlated. So while one is going into profit and undoing itself, the other one is going into drawdown. So just watch stuff that's, if you've got stuff that's going into drawdown and stuff that's going into profit, use them against each other, yeah? So if you're going to bank a load of money there, use some of it to take some of that off and just balance your portfolio, basically. So anything that you've got getting a little bit out of hand in drawdown, make sure you use some of the profits that you're gaining on other positions just to reduce some of this down. So just manage it all as one. US dollar Swiss 175 ADR. So it's on its way. Watch that 225. Again, that's one I'm going to get into today as well. US dollar Swiss. So I'll be taking a long on that one. That's not even lit up yet. Look. When this move started, we were at 31. We're up here. Now we're down here. So a lot of these are suddenly going to light up. You're going to get a lot of triggers with the EA. So just watch your exposure this afternoon if you're trading with the EA. Right. I'm not going to really stay on this afternoon because until these moves are over, we don't know where we're going. But watch support resistance bounces, basically. That's all you can do this afternoon. If you're in any indices, obviously, these can continue. There we go. So there's all your ADRs just lit up like a Christmas tree. Look. So every single one of these, for me, that is above a 75.25 level. Every single one of those is a potential trigger this afternoon for the EA. So a lot of exposure to go on this afternoon. So just be careful. With the indices this afternoon, obviously, if this US dollar is going to continue, they're going to continue. So just be careful you don't get out too soon. Wait for market structure really to show you where you're going, yeah? So when you got moves like this going on, my rule of thumb is always watch the lows, yeah? As you can see here, we haven't broken a low. Yeah, until this breaks below a previous low, this thing's not going anywhere. It can push up, go sideways, pull down, go sideways. Yeah, until it breaks these lows. Yeah, look at the wicks. That wick there, we closed above it. That wick there, we closed above it. That wick there, we closed above it. This wick here, yeah, until you close below one of those wicks, that's the first time sellers are in control. If you don't see the sellers in control, you do not want to get out. Yeah, if necessary, just move your TPs further away. If this thing's pushing up to here, yeah, and we're still pushing and we pause and we do that, we don't break lows, that move that away because this thing could go 300 ADR plus today. Just be careful. And don't forget, you can always re-hedge if you need to. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. But we'll analyze all this tomorrow, try and pick it apart and see where the Fed's going. Also, keep your eyes on Financial Juice for any information that comes out of the Fed, basically. Barking, we're not in recession right now. They'll try and firefight this. Yeah, they won't want this US dollar dropping this fast. They'll try and firefight this afternoon. So it's only going to take Powell to come out and to say one thing's like, no, there's still a chance of an interest rate rise, and that thing will just go straight back the other way. So keep your eyes peeled this afternoon. All right, have a good afternoon. Bank anything you can. You can always put it back on again, don't forget. So if you can bank it, do it. You can add it back later. And we'll have a look at it tomorrow and see where we're going. All right. So have a good afternoon. Anything you need, I'll be in Telegram. Otherwise, I will see you either 7:50 tomorrow morning or 2:20 tomorrow afternoon. Have a good day.